Back here on Open, talking a little bit about credit. Andy Sugu, CEO of Y2K Credit Solutions, is sharing with us, and I want to get you into the place of if you have credit, and talk about also getting a mortgage, because a lot of people in the year 2017 are looking to actually own a home or go about purchasing a home. We're going to connect you here and get you connected with credit and home owning, and we're pleased to be joined by Mark Vijek. He's the loan originator for Homebridge Financial Services, and he joins us now on the set too. But Andy, let's talk about this here, because credit and getting a mortgage, they go hand in hand.
Absolutely. Everything with mortgage is interest rates, how low the rate's going to be, what's your payment going to be. Remember, you're locked in for 15, 30 years. Mark will explain that to you. So imagine you have to pay 6% interest rate for 30 years. The amount of money you'll be losing and the wasting out there because of a bad credit score. So, just a few minutes ago, I tell you that the 3-digit score, your FICO score, is really going to generate or drive you to 2017 where you end up in your financials. And it's also going to either make you or break you with your mortgage and your interest rates and what you get approved and what you qualify for. You might not be able to apply for some of the programs. There's a lot of programs out there, Mark will tell you that. There's a lot of programs that require credit scores to be a certain number to get approved for it.
So Mark, walk us through this here. So for the mortgage business, what does the person need to know?
I think the first thing that Andy talked about earlier, the first thing you want to do is get your credit. We want to get you a copy of your credit report, because that really is going to paint the picture for what's going to happen in the process. So if there are simple things in your credit report that we can fix, such as small. One of the things we see a lot is small balance. Like, let's say you have a $200 credit limit on a credit card, but you owe $190 on it. So you're almost maxed out, and there's little things you can do, like paying that down to 50%, that will jump your credit score, fast, 30, 40 points. And simple things like that is what I can help you with. When it comes to more complex things like judgments, that's where Andy gets involved. But in 2017, you're going to see credit really driving mortgages. I mean, because not only does it affect your interest rate, because the lower your credit score, the higher the rate you're going to get. There's add-ons based on how low your credit score is. And it also is going to be, the amount we're willing to lend you is also going to be credit-based.
Well, talk to us about this, because a lot of people out there do suffer with bad credit, but yet and still they want to be able to get a loan. So can you get a loan with bad credit?
You can. It's just more restrictive. So the better your credit is, the more opportunities we have to give you products that allow you to borrow more money and to do more things. The lower your credit score, I can still get you a mortgage, but if your credit score is 550, we're going to want you to put 10% down. You see what I mean? So you're going to have to come out of pocket with more of a down payment the lower your credit score is. So that's why it's beneficial to have a higher score, because then you make the choice how much you want to put down, more or less.
And talk about some tips. I know one of the tips that you talked about is keeping some savings in reserve.
Yes.
Talk about that.
I mean, a lot of mortgages, different products are going to want you to have 3 to 6 months reserves, whereas the FHA loans, which I'm sure you've heard this buzzword, the Federal Housing Administration loan, they actually don't require reserves. So, depending on your situation and what type of loan you're looking to get, the difference being with FHA loans, there's going to be mortgage insurance on the loan, so you're going to pay more each month, whereas if you're going to put down the 20% into a conventional loan, there's no mortgage insurance. So.
And then we hear about sometimes a no closing cost mortgage. What is that?
There's always going to be closing costs in a mortgage, just because the mortgage tax, just starting with mortgage tax, I mean, in the city it's 1.8%. You have to pay that mortgage tax because the tax obviously is going to the state. There's going to be title. So there's always going to be closing costs. It's just we can actually roll the closing costs into the loan. So you can finance your closing costs if you choose to. But I mean, on a $400,000 home, we usually say 4% is what your closing costs will be. So if you want to do quick math, that's kind of a ballpark.
Right, and then you could actually roll that into your loan.
Finance it.
And finance it into your loan, and then that could also help you in doing what you need to do.
Correct.
Well, gentlemen, I want to thank you for coming and sharing a little bit about what's going on with credit
Thanks
as far
for
as
having us.
in mortgage. And of course, they've been on Perspectives. You'll probably see them on Perspectives again, talking a little bit about this. So if you're interested in trying to find out about being that homeowner in 2017, because a lot of people have New Year's aspirations, we'll give you some tips on how to do that. But Andy and Mark, thank you so much for coming and sharing with us.
Thank you for having us. Happy holidays.
Yes, happy holidays. That's right. Listen, we are at the end of our show, and we do have to say happy holidays. We want to thank you, the guests, for joining us, and also the viewer for tuning in. Now, if you missed any part of today's show, catch the Recablecast at 5 and 10 p.m. on Cablevision's Channel 67. If not, you're on Verizon Fios. You're on Channel 33, or you can watch us anytime on the web at BronxNet.org. I'm Daren Hyman. It's been a pleasure coming to your homes. Have a happy and a safe holiday as we get ready to get a little bit closer, and be sure to keep this channel wide open.